Very well set. A very good morning to you all, distinguished ladies and gentlemen, and thank you for joining us this morning. Thank you to our guest today, Mr. Opeyemi Agbaje, my brother, and someone that I always enjoy listening to, even for myself. I want to thank the DCSL team also for inviting me to moderate this session. What we're going to be doing is really looking at the issues surrounding where we've come out of in 2021, and then, of course, looking forward into 2022 to see how we as business people can take position and come out with better results. I actually think that I like the fact that most of us, from the numbers I see, that most of us believe it's going to be a better year and trusting God that it's going to be just that. And of course, the numbers showing that we are not immune from the things we've been seeing in the society. So price inflation, yes, the big one for most of us. We know that inflation, much as we saw a dip down to about 14 point something percent, we're now seeing a slight uptick as well. And then there's the question, of course, as to how real these numbers are in terms of when we look at specific items and how it impacts on our business. What kind of inflationary pressures are we seeing out there? When we think in terms of businesses and borrowing, for instance, and asking ourselves whether there is a value erosion, whether, from the point of view of being able to access funding, accessing them at reasonable rates when you're seeing 19, 20 and above percentage, whereas from savings, you're earning at best a 3.5%. And so your money seems to be losing value on a daily basis. So when we look at the country too, we're seeing that unemployment is a very significant part of the conversation. And we, the entrepreneurs, we are the ones that when we build added capacity, we can readily address that situation. So we're in an economy now where our unemployment rate is at about 33.3% and underemployment at about 22.84%. Now, these all add up to a basket of challenges that we face. COVID, as we know, has not gone away. We're still dealing with the aftershocks of that. And of course, the Omicron virus is a challenge for all of us. Security has been a recurring decimal that we're all grappling with. And I should say insecurity. And now we're getting sound bites again, like Chinedu pointed out, around the removal of the fuel subsidy. What might be the implications of that for business? When we look at the budget, we're asking ourselves, what's the direction of government spending? Where are the gaps? What are the expectations that would have led us to see a different outcome in 2022? Can we hold fast to the projections in terms of capital expenditure and things that should help to increase and improve the environment of doing business? So we're going to be talking with our guest today, who is a renowned economist and strategist, and is going to be sharing his views with us around how we fared and how we're going forward and how we as business people can take position. So at this point in time, Opeyemi, I want to say something just before we start. And when we chatted a little earlier, I said this to you. I want this conversation this morning to kind of look like what is the difference between a PhD and a DBA. The PhD is more, yes, you understand what I'm saying, it's more research oriented. You just want to contribute to perhaps some existing theory or thesis, right? But the DBA, you want to be able to contribute in a way that you can actually take that research and apply it in a practical business solution. And that is what I think that the audience needs today, for us to have these conversations in the way that breaks down both the macro and micro issues such that we can tangibly make the right set of decisions in our business in 2022. So let me ask you first and foremost, when you look back at 2021, what were the big impacts in that landscape? From a sector performance, perhaps you want to just have, throw some light on that. Who did well, who didn't do well, why? So what are the expectations then when we begin to look forward into 2022? But I think let's start just reviewing how we performed in 2021 from your own perspective. Opeyemi?
Thank you very much, Audrey. And of course, I should acknowledge the DCSL team, BC and a team. They do well, and we always have these sessions. As to speaking in what I call uncomplex language, Audrey, that's I think is what I typically bring to business and strategy and the economy. I tend to think the value of all these conversations is when the audience leave the conversation with insight. I'm not hearing some words that they think are big words, but they're not quite sure what they mean. So if I reflect on 2021, let me reflect first on the positives. And there are a few. The resumption of GDP growth, for whatever is worth, still, I mean, especially in the second and third quarters, and possibly also in the last quarter when we see those figures, both, and this is both at the global and the Nigerian level. Of course, that dovetails then into sectors. Of course, the reason consolidated GDP growth improves is because it is a accumulation of all the sectors. And so if you take the third quarter, for instance, being the latest available quarterly result, you have some remarkable growth figures from some of the sectors. So finance and insurance was 23% growth in the third quarter of the year. Transportation, 20% growth. Trade, 11.9% growth. Now that was significant, trade, because trade has been in negative perpetually since even the previous recession, not the last one. And so it's beginning to grow again. Telecoms, which has been the star of the economy since the deregulation and consistently ever since, grew by 9.6%, almost 10%. Health, 4.99%. Manufacturing even grew by 4.29%. Construction, 4.10%. And real estate, 2.32%. Real estate is also significant because that was also a sector that stayed in negative territory perpetually since the first recession, and through the second one. So we see now the big qualification, of course. Everybody who has listened to conversations about the economy in Nigeria knows that there's something called base effects. If, for instance, in 2020, because 2020 was very bad, you had a sector do very badly, because it's coming from a very weak base, it is easy to have significant growth in the first year. So the real test will be 2022. I want everybody to understand. But nevertheless, we have to be happy that we're throwing away all these negative growth numbers, and we're beginning to do very stronger across the non-oil sectors. Of course, the oil sector is still problematic. Agriculture, which is the largest sector in Nigeria, grew in that third quarter by just 1.22%. It's a signal that we have, I mean, everybody knows, finally, insecurity, in my view, is now reflecting in agricultural growth data. So if we say what are the positives of 2021, we also have the Petroleum Industry Act, which I think may turn out to be significant, essentially embraces the regulation of the downstream in the law, remains for it to be implemented, creates new regulatory institutions that are more specialized, one for the downstream and midstream, one for the upstream. Of course, you're an oil industry person, so you're probably familiar with that. Creates host community funds, frontier funds, new fiscal regimes, carbon tax, and all of that. So we finally got to creating a slightly more modern regulatory regime for the petroleum industry. Yes, there are concerns, it's not perfect, but it's for the last 2 decades, we finally got one. I think that one of the slight positives from the Nigeria point of view of 2021 is also that while there's still a lot of concern about COVID, the data does not suggest that it's a problem in Nigeria. And Nigerian businesses and the economy and government have finally got the attitude to just go ahead in spite of COVID. And to some extent, this is also true globally, but yeah, things are worse in some economies. I think that we've also must acknowledge some slight infrastructure improvements in rail, in road, and all of that. I think that generally the sector that has impressed in the Nigerian economy is around technology. Starting from the telecoms, going into the financial technology, fintech, going into the payment sector, and even the software and programming space. And that reflects in the data in terms of investment. That's the only sector in which we are hearing big investment dips with venture capitalists, global investment managers, private equity funds, all finding investments in the Nigerian tech space. So that looks like the hottest area in the Nigerian economy. In Naira, maybe for what it's worth, we can acknowledge that as some innovation from the central bank. I don't think it's a life-changing or economy transforming initiative, but well, we acknowledge that. And finally, the African Continental Free Trade Act. Now, that may be, depending on how we choose to react to it, that may be an advantage, it may be a threat. If Nigeria positions its economy and its businesses to seek continental imprints and to dominate across the region and the continent, it could turn out to be a very big opportunity for us. On the other hand, we could also get swamped by more enterprising businesses from other parts of the continent, including South Africa and all of that, and Ghana and all of that. We see businesses choose to go to Ghana for put their head office rather than Nigeria. So we, in spite of everything, we want to acknowledge that there were positives in 2021 and they would have an impact on 2022. On the other hand, there were negatives. And Chinedu and yourself have alluded to some of those negatives as well. Inflation being a significant one. Yes, it was tapering downwards in 2021, towards especially the second half, but it's still high at 15.6% or so. Currency is a big concern, devaluation, depreciation of the currency, and the pressures on the exchange rate, the pressures on our reserves. Low investment, for me, one of my biggest concerns, because the way to come out of our current economic hardship, in my view, the fundamental way is to increase investment, both foreign direct investment and local domestic investment across sectors of the Nigerian economy. So investment has been a negative. We've seen FDI figures that show that we've lost our pride of place in African foreign direct investment. Social sectors, we don't talk enough about that, but if you look at the data for unemployment, which you mentioned, Audrey, for poverty, the general misery across the Nigerian economy, which manifests now, I believe, in insecurity, our crisis levels of insecurity, which are all negative factors across the social sector. And then I would then also talk about policy gaps. You mentioned, and Chinedu mentioned, the issues around petroleum subsidies. That's it's proven to be an intractable policy conundrum that the Nigerian economy is trapped in and unable to take a rational way out. The law now says, yes, we should resolve that, but then we're in the political season, and the risks from the politician's point of view and from government's point of view around that decision are significantly elevated. Electricity sector reforms are essentially stalled. We're not recording any improvements across that segment. One of my major policy concerns and regrets, I would say, is that we've gone through this oil price shock. It seems we're, at least given the oil prices today, the worst appears to be over. But we essentially wasted, as I said in another forum last week, we wasted the oil price crisis. It should have been an opportunity for us to do the downstream deregulation that we're now, otherwise called subsidies, that we're now grappling with. When the prices were low, we had the best opportunity to resolve that. It should also have been the point at which we accelerate efforts to generate non-oil revenue so that we can solve the government dependence on oil and to boost non-oil exports and all of that. Essentially, none of that has really happened to any significant degree. So essentially, the crisis has come and may be easing, but yet we're just where we were before. So those for me are significant negatives. You may now add the political transition risks that may be more accentuated in 2022. And when you look at the inflation data and the specifics around food, you would also add that imagine food insecurity as a major negative. So for me, those were the big deals in 2022, fairly evenly balanced between good, the bad, and when you think of insecurity, terrorism, insurgency,
definitely the evil,
the ugly too.
Thank you so much, Opeyemi. Excellent analysis, and you're spot on. I think that when we look back, we see a basket of positives and negatives, and we see this, in my view, both from the perspective of the government's own move, as well as, of course, the tenacity and resilience of the private sector, contributing in a very unclear space. So let me ask you now, if we come into 2022, so when we look at it globally, we see that both the IMF, the World Bank, everybody is kind of projecting that we're going to see a slowing of growth, right, over the next couple of years. But for Nigeria, there's a publication, the World Bank published a report, the Global Economic Prospects, and is projecting that our economy is going to grow by about 2.5%, which is slightly 0.01% above the earlier estimations in 2021. And this is supposed to be from a combination of factors. One, of course, we're expecting the oil prices to have some impact, and as well as easing of production cuts that will benefit Nigeria and all that. And I'm just wondering, in the same space, we're also having the conversation around the subsidy removal. I'm trying to, have us play out a scenario where it is actually done. And that it creates its own sets of distortions and potential impacts, especially plus or minus what Labour's reaction might be in that space. And you've made reference to the issue of elections. We have to face that as a reality. We're going to see some increased spending. A lot of that spending is not necessarily going to be channeled to productive activities and the like. And as it is, I know that there is some conversation around raising of interest rates globally and what the impact might then be back on Nigeria, especially if the US, does these 3 planned increases in 2022. So I'm just saying that as I look into 2022, I see a basket of potential outcomes or potential moves that can have significant outcomes for business, both from a cost and a risk perspective. And that's really where I want us to then go into that. When we look at all these different things, I mean, of course, an economy is a going concern in its own way too, and we can't get away from all these things. But for you, what do you think are the risks and the opportunities? When we're talking about strategy, that common saying is that you can model risk, but you can't model uncertainty. And I think that coming out of the pandemic itself, we saw strategy begin to wear a new set of clothes, right? It's not quite, doing strategy is very different now. So I would like you to take it from the point of view of, as you look forward into the economy, keeping all this in perspective, where are the opportunities, what are the risks? And then let's now get into that conversation around strategy. How do you as a business do strategy in this kind of an uncertain environment? Opeyemi.
Thank you very much, Audrey. Now, first point I want to make, I didn't mention one of the major risks, which was big in 2021 and which will continue to be big. So let me remedy that. The fiscal risks around debts, around debt servicing, around deficits in the budget, and all of that. And indeed, around the structure of our budget spending. which continues to be predominantly the current expenditure and debt service. I thought it was important to include that in the picture because we're going to grapple with this going forward. If it's either we rapidly increase revenue or we begin to get more and more dysfunctional as a government. Now, so let me go back to your question. Let me start with petroleum subsidies. Like I said earlier, we wasted the best time to deal with that issue because when oil prices were quite low, if we were deregulated at that point, oil prices may not have risen so dramatically, and it would have been a deregulated market, and perhaps Nigerians would have been prepared to accept if they had enjoyed a deregulated or at least endured even a deregulated market for 2 years if prices now had to go up. So we lost that opportunity, and we're now trying to deal with that issue at possibly the most awkward period for the government when an election season has come. The major signal I think I take from our friend during Salami's appointment as Chief Economic Advisor, if one wants to be positive about it, is that it suggests a focus on economic policy and difficult decisions. And so perhaps that's an indicator that suggests that perhaps government wants to deal with these difficult economic decisions and probably needs somebody, an anchor person for that purpose. On the other hand, it's difficult for me to see the politicians in government and so on agree to deregulation of the downstream this year. I suspect that, so there'll be a great tension between the policy people in the Economic Advisory Committee of Government and now the Chief Economic Advisor, and the political people who can fairly be certain that Nigerians it will cost them at the polls if they do that. Of course, you can predict that Labour will resist. And so I will leave that open. It's difficult to bet whether government will have the political will to go ahead in spite of every opposition. If they want to do it, the best time to do it is now, while the election is still at least over a year ago. As we go further into the year, it will probably become impossible to do subsidies. Now, let's move to oil. Oil prices have shown significant recovery and around $80 per barrel now. Fundamentals do not suggest aggressive oil price growth. Indeed, if you then look at it from the point of view of geopolitics, the US is now in the midterm election season as well. And oil prices are hurting the Democrats and the Biden administration with inflation rates that are in the US, and those inflation figures are essentially down to the oil prices and maybe a little bit around supply chains, the disruptions allowed. But the biggest factor in the mind of the voter are the oil prices and the prices at the pumps when they get their gas. So you may expect that Biden's policy posture may finally shift in favor of finding lower oil prices before the elections, which means, as we all know, that it could begin to put pressure on the major oil producers. It could begin to take a more liberal policy posture on climate. It could begin to take a more liberal policy posture on pipelines and things like that. The consequence of which, and of course it could release significant amounts of US oil stockpiles, the consequence of which will be to lower oil prices. So I would suggest that we may face pressures on oil prices, downward price pressures on oil prices, combined with the fact that Nigeria as a nation has not been able to meet its production quota. So that means, again, pressure on the budget. We don't meet production, there's pressure on oil prices. That means reserves go down, which then links us to the third peg in this, in my conversation, exchange rates. Because of course, by the time you're not getting what you need on revenues on oil, you have pressures on your currency. And so again, in 2022, we clearly will have pressures on the currency. And we may also face increased pressure on the central bank from institutions like the IMF and the World Bank and all of them, and from investors to find a way of achieving exchange rate convergence. So again, you have the possibility, maybe the likelihood, that we'll suffer further depreciation in the currency. And at some point, we may have to experience further devaluation. What in all of this, what should be our policy priorities from the policy point of view? And how should businesses, from the policy point of view, we can begin to see some priorities emerging. We must have higher rates of GDP growth. We should not be fooled by 2022 data. It's good, like I said earlier, but we were coming from very weak basis. So it was easy to have 4% growth, 5% growth, when you had a negative of -6 in 2020. So this is now when the test really comes to get 5, 3, 4, 5%. Of course, that's why everybody's saying 2%, 2.7, 2.6. Those are the expectations for GDP, which, as we all know, is not good enough. If we have 2.7%, 2.6% GDP growth, which is just about or lower than the rate of population growth, our people will continue to experience poverty and unemployment. So we need stronger growth. We need to resolve the issue of petroleum subsidies, whether popular or unpopular, risk inspect we need, because it's an irrational. Every nation that is an oil producer rejoices when oil prices go up because their revenues are enhanced. Nigeria is not sure whether to be happy because in one pocket the revenue goes up, but then in the other pocket the subsidy bill gets higher. We need to enhance public revenue. I've hinted at that. The government is focused on that. It's easier for the government to focus on enhancing public revenue, increasing VAT, finance bill to increase things. But yeah, it's important, but we need to do other structural reforms as well. We need investments, which is why the rate convergence issue is important. We need foreign direct investment and we need domestic investment. And even domestic investment, we've seen investors who have chosen to convert their wealth into foreign currency and bring it in Naira when there are opportunities to be taken, rather than to invest in the Nigerian economy. So the issue around exchange rate convergence is not just for foreign investors. Even domestic investors are moving into dollar and staying in dollar and only coming into Naira opportunistically. So that means that we must deal with the issue of exchange rates and harmonizing them and achieving convergence if we must have investment.
Opeyemi, can I jump in here and just
Yes.
ask a question? And please don't, I know you have some other points. We can come back to them.
No,
please.
go on, yeah.
I'm thinking, as you're speaking about the exchange rates. Now, this is a reality for a lot of them, but some people are seemingly immune in the sense that they may not transact directly in foreign currency, but somehow we're all impacted if we're doing business. So let me just share a quick personal experience. Last year, for instance, on some project, I needed to raise $1 million. Now, in the scheme of things, that's not much, but trying to now make sure that you get it at the official rates or through one of the windows to make sure that at least your project economics make sense. And many things are happening at the same time. Your banks are bidding for you. You are trying to raise $1 million. They come back and tell you, oh, they have $12,000 this week. After another 3 weeks, they come and tell you, okay, they successfully got $26,000. And you're sitting back and thinking, how on earth is this supposed to add up to $1 million, and over what period? Because you also have contractual terms that you're trying to abide by. You have a payment window, and there are liabilities and indemnities that are attached to your defaulting on those payment clauses. And ultimately, then what happened was you still have to go back to the parallel markets, right? And which in itself, that's, I remember a period where almost overnight we had almost a 200 naira differential for some period in the market. Now, when you think about how this impacts on your project, because at the same time for us, there was an escalation in the global price of steel. So all these things just add up to a very uneasy environment of business. So as we go into 2022, with all these other things that can create pressures, I'm thinking oil prices, there's potentially going to be a drop that's going to impact on government revenues. We're seeing even domestic investors, everybody's trying to hedge. So how should we then play in a 2022? For those of us who have that dollar exposure directly on our businesses, I'm just wondering, if you have some suggestions around that for the audience.
Fantastic question. That's why it's a more a more difficult conversation, because the person moderating the conversation deals with the issues. Now, I think that the basic insights I have developed into the structure of the Nigerian economy and the implications for businesses, and this is not new, this is maybe a decade old, is that business models that are dollar dependent will be challenged. And therefore, it is not surprising that we notice that, I said, for instance, the star in the Nigerian economy was around technology, software, programming, all of those things, IT. And why are they such a star? Because they are not dependent on dollar inputs. The programmers are increasingly Nigerians. The input is their brains and their skill. And what they actually need is cash from abroad when they have a really important breakthrough, like Paystack or Flutterwave or any of those people. They need investment to scale. And it's the same thing for cement, for instance. Yes, there's some inputs that are imported and all of that, but the basic input is in the ground. Agriculture, that's why the opportunity is so significant, even though we keep missing or mismanaging the opportunity, either from the policy point of view or now from the security point of view. So that basic insight cannot be avoided. One, the best business models in Nigeria, given our FX scenario, is that these dollar-dependent business models are always increasingly going to be challenged. Indeed, I came up with a rule of thumb fairly arbitrary, a rule of thumb, but for clients of ours, I always said, if the dollar input is higher than 25% of the project cost, you can anticipate that there's going to be problems. So there's nothing we can do about that in the short term. Look, I joined the Nigerian banking sector in the 80s. In 86, the exchange rate was 66 kobo to the dollar. I saw it go to 3 naira. The first SAP or SFEM auction, it was called then. I saw it go to 4 naira. I saw it go to 10 naira. I saw it go to 18 naira. I saw it go to 22 naira. I saw it jump from 22 to 80 naira. I saw it move from 80 to 111 or 110, around that 110 for a long time. Now, the question Nigerians should ask is around that 198, 100. There was stability for a long while until the oil price collapse happened with the global financial crisis. The question we should ask is, why was that long period of stability until that oil price shock arising from the global financial crisis? Because policy improvements were happening. We were reforming sectors. We were reforming telecoms. There was investments flowing into Nigerian economy, into the telecom sector. We reformed pensions. We reformed banking. We reformed so many sectors. We wrote a bill for solid ministry. The only way we can reverse or at least slow down devaluation of the Nigerian economy, and that's why I've been stressing the issue around investment, is when we do structural reforms, policy reforms, we open up sectors, we open up investment. When there's a big flow, I know that under Soludo as CBN governor, for a long time, the government of Nigeria was not funding the FX market. There were independent flows of FX through investments in the oil and gas, in telecoms, in pensions, in all of those sectors. And then there was private equity flows, investors seeing opportunity in the Nigerian economy and beginning to take it. So bad news, Audrey, is that there is no, in the current environment, the FX challenges will continue. Now, what can businesses do? Find dollar hedges, find dollar income, reduce dollar inputs. All of those actions to look for alternative business lines that balance the dollar inputs and earn some dollar income. But of course, that's not available to every sector, for instance. So I understand that. But even if we did the PIA, for instance, in the oil and gas sector, there is no reason we shouldn't earn dollars from refineries. If Falcon Gas built a refinery, if the Petroleum Industry Act allows deregulation to happen, and then you can build a refinery, and then you can export across West Africa or to Singapore or Malaysia or anywhere. Those are the only substantive things we can do. So we can look for hedges, we can look for dollar income, we can look for dollar investment, we can look for independent sources of FX that then reduce the pressure on CBN supply of dollars. Now, that's my immediate suspicion around the FX scenario in 2022 and beyond.
Right, thanks, Opeyemi. Now, I totally get that. And the reality is that for many of us, there are, if you're in certain sectors, like you said, where you can begin to think of import substitution, you can begin to think of what are your local alternatives. But we also have a huge infrastructure deficit. And for some of us, our businesses are around contributing to the development of that infrastructure, and your inputs are not local. So when you were talking earlier, you pointed out the fact that the manufacturing sector had grown by about 4.29%. Which is good, but for when you begin to dimension that against the population size and the constraints and the dearth of infrastructure in the economy, I think that those numbers, we shouldn't be impressed by them. In my view, we should be doing significantly more, because the biggest requirement, one of the biggest for Nigeria now, is industrialization, so that we're building, we're creating jobs, we're contributing to developing the infrastructure landscape and resilience, economic resilience, revenue base of the country. So it is difficult terrain for a lot of players. But I hear your recommendations in terms of looking for dollar hedges, seeing everywhere you can reduce the dollar requirements. And this is really, when we're talking strategy, the way that all of us are having to look at our businesses and our projects and ask ourselves very distinct questions around where the efficiencies are in the local environment, how do we mine them? And then, of course, bringing the diversification of revenue question even into your own business. I think this is a great time for mergers between different, business concerns. So when we look, whether within our industries, even across industries, and we see potential investment opportunities, then those of us that have capacity can come together and try to take on those opportunities and bring them to the fore and actualize those kinds of projects. So I truly, totally get where you are. It's not going to be easy, but I think this is the mindset that we as business people need to have in this season, that we can't just spend time complaining. We have to put our thinking caps on and do what we can to change it. So we were talking about the opportunities, the risk, and how we can do strategy in this environment before I interrupted you with that question around Forex. So maybe I allow you to continue at this point.
Okay, thanks, Audrey. Let me agree with you and about that imperative for strengthening local capacity through mergers. The other reason that is important, which I've alluded to earlier, is the Africa Continental Free Trade Agreement. If we want to go across Africa and take the opportunity of dominating the continent, building, expanding our business sector through continental markets, access to continental markets, then probably you need to strengthen capacity. Yes, so I was talking about policy priorities, and then I'll very shortly move to the strategic imperatives and sectors. So I had talked electricity sector reform. We can't run away from that. Like I said earlier, it's stalled and nothing basically is happening. The tariffs already appear high to the Nigerian consumer, but the industry still says they're not cost reflective. And so we still have some way to go. Again, another difficult economic decision for government. I mentioned fiscal risk around revenue, the social sector, security, and then agricultural sector modernization. So let me talk about sectors, strategies, opportunities, and risks as we begin to focus more on what businesses can do rather than what government ought to do. So sectors, we've seen a whole opportunity space around technology. I've said that. We've seen a whole opportunity space around fintechs and payments and all of that space. I think that opportunity will continue to be available, and I suspect that the financial sector, plus the ICT sector, plus the telecom sector are going to be engaged in a battle for market share in that sector. That will be an opportunity. We still have the imperative of agriculture sector modernization, and there still remains an opportunity there. But my fear is that that opportunity is becoming increasingly notional. And I am even an example of somebody who in 2021 made the decision to register, say, for instance, in my community and agricultural business. But then the reality set in. You know, today, if you want to do a farm and you want it to be viable, you probably have to have a fence around it. Now, that immediately renders the project unviable because of the influx of cows and so on that can eat up all your commodities. So then you now have to move to something that cows don't eat. And then, you know, the whole process then becomes dysfunctional. And then you then have the large agricultural belt of the country in which there is almost total breakdown of law and order. So that's I would still say agricultural modernization and the value chain remains an opportunity, but then it's becoming more and more difficult for our people to take the opportunity. And policy must move to restore security and rationality in the sector. I said that real estate and trading showed some revival in 2021, which is very good news. And we should see that accelerate in 2022 and beyond. The health sector was also, I mean, for most of the last few years, the health and education sectors barely showed 1% GDP growth. Sometimes they were negative. But we've seen investment in the health sector, and it's beginning to show in the data. Most people, most Nigerians, including businesses, have now realized that there's significant opportunity in health, in education, and particularly health, because in some sectors of education, there's overcapacity. People have built too many private primary schools, private secondary schools, and then there's nothing differentiating them. So it becomes a commodity market. But the health challenges and the opportunities for improving privately vended health diagnostics and all of those other opportunities is now a big deal. So the big point is, across sectors, opportunities remain. In terms of strategies, strategies is always unique to the farm. But then, given the environment we're in, there's some general principles that should apply to everybody. One of them, as we have said, is seek opportunities in technology. Seek opportunities in non-FX dependent industrialization. The third one is dependent on policy. We have significant infrastructure gaps, like you've mentioned. And there should be, money should be flocking into infrastructure in Nigeria. Private sector money into infrastructure. Unfortunately, that is heavily dependent on political risk and perceptions around policy risks as well. So government has to understand. The strategy of government for the last 7 years or so in relation to infrastructure, we must concede and commend that they've made some progress, especially with rail and with many of the major highways across the country, to Lagos, Ibadan, all of those. So there is progress. But the Nigerian infrastructure challenge is so vast that government money will never solve it. Worse still, at the point when government revenue is challenged and government has to borrow. So what we have basically done, the strategy that has emerged from government has been, we would borrow to do infrastructure from China or whoever else, from Sukuk, from whatever else. And we'll use that to fill the gap of the revenue shortfall. I don't think it's a sustainable strategy, especially as I think we are reaching the limit of our borrowing capacity, if we have not already exceeded that already. So we need policy to help the private sector invest in infrastructure, just like your farm is doing and many other farms are doing. There are opportunities across sectors, there are opportunities across initiatives looking for dollar income. If our businesses should focus their mind on how can I find dollar income? I'm making the recommendation. Why can't I deliver seminars globally? And even if it's $1 per participant, so we all need to tune our mindset away from that. We need dollar to buy something and bring it to Nigeria and sell it in Nigeria. The mindset now needs to become, how do we get dollar income? And I suspect whenever anybody turns his mindset in that direction and finds the competencies required, then he will get the dollar income. So that was just a few. And then I wanted to make a last point about execution. Our businesses, and I consult across companies, across sectors, and the thing you see that is universal, almost universal, is that our businesses have very weak capacity to execute strategy. To some extent, that is universal, but in the Nigerian case, it's worse. Data and strategy suggests that execution is always a problem, even at the biggest firm, even at the Fortune 500, even when McKinsey comes and does a strategy. Many firms find it difficult or they fail at execution. But I think the case in Nigeria is almost reaching crisis levels. We just don't have, worsened by environmental factors, obviously, human capital factors, obviously. But so we need to focus on capacity to execute. Because often when we go into strategy sessions, we find that people reach reasonable conclusions about strategy. They reach viable conclusions about strategy. But when you come back 3 years later, 2 years later, and you find that they've just not been able to take it beyond base level execution. So that is, for me, and execution is about capabilities. So you have to build the capabilities to execute the strategy. It's also about culture, corporate culture. So you have to build the culture in which people are performance driven rather than politics or social driven, if there's something like that. So I just wanted to share those thoughts on them.
Thanks, Opeyemi. So I hear you in terms of execution, and I was just thinking, you're so right. It is a challenge, broadly speaking, and sometimes though it's really that beyond the putting the strategy in place, almost on a daily basis, you have one new fire to fight, and that is why I had asked the question about how we do strategy. And now, of course, is the element of how best we execute in the kind of environments that we're in, where, it's the distortions, they just come out of nowhere sometimes and blindside you. But it's very important then, yes, to look in terms of building capacity, and of course, as we're talking strategy, also doing that scenario planning that allows you, a bit of the ability to adapt, what I call capacity to flex, when some of these things come at you. You raised a point which I think is very valid and reminded me of something when you talked about the issue of looking for dollar income, which is the fact that we actually become a more resilient economy if we can increase our export potentials. And I tie that even to the conversation around the modernization of the agricultural sector. Like literally, we are sitting on a myriad of exportable products when you even think just of agriculture, and you think about it, but we need to support it by having added power, by the things that ease the routes to market, being able to put in place storage facilities, things that don't make your packaging and processing as expensive and therefore your end product less competitive. But I'm excited to see that coming out of within COVID and coming out of that 2020, we saw a lot more Nigerians generally just taking our food products, processing them, packaging them, and we're seeing them in even mega stores overseas. So it's now enough to have, we now need to be looking for how to scale those types of businesses. Then you talked about, for instance, even if it's just to do a training where you are earning $1 and you have, how many participants. Technology allows you to have thousands of people on one webinar. And that reminded me of something my friend Udo, she always talks about building empires with your mind. How some of us, in fact, how to survive in an uncertain environment is a webinar I can package and sell based on my experience trying to do business in this environment. So you're very right. We just need to start thinking, how can I export? What do I have to export? Because in that process, I'm going to be adding value. And in the process of adding value, I'm going to be creating jobs and so on and so forth. And which then addresses that social security element that you also referenced. Now, I saw a comment in the chat. I think it was, let me just look at that, and a couple of questions that have come in so that we get to the Q&A portion. And says that the private sector is doing a great job in strengthening the economy, and the Nigerian government needs to create the conducive environment. And you're absolutely right. I'm sure Opeyemi will agree with me. But at the same time, given that, we understand the government is not going to change overnight. That's a huge machinery, and it's a machinery that has its own unique issues. Not only corruption, even structurally. So while that is happening, there is an imperative for us as business people to come together, and that's what the private sector is doing, even through this kind of program that DCSL is doing, is about challenging us who are players to see how, even in the face of all this, how do we create value? It is always said that when you look at the influx of the Chinese and some other nationals into our manufacturing sector, for instance, it tells you that they're seeing something we're not seeing, even with all the problems that we have. So just because of time now, I want to look at some of the questions that we have and share them with you and see, what advice you have or what responses you put forward. One attendee is asking, what is the escape route from low growth to an inclusive growth?
Excellent question. Now low growth, the opposite of low growth is higher growth. But the opposite of inclusive growth is what we had previously. So he actually spoke about two different things. For instance, between 1999, when President Obasanjo came in, returned to civil rule, and particularly from 2003, when we began to do aggressive economic reforms under the Ngozi Okonjo-Iweala team, Soludo at the central bank, chief economic advisor, we reformed many things. We began to see growth levels that were high, in excess at first of even 10%, until it moderated because we were coming from a low base. And then we stabilized between 6 to 7% growth. That was good growth, but it was not inclusive growth. We didn't take care to ensure that growth that was happening included the poor and the vulnerable. So the reforms we were doing were creating big business sectors, opportunities for people in banking, opportunities in telecoms, in cement, in pensions. But these things did not automatically improve the lot of the general populace. So we had reforms, growth, and economy that created quite a lot of billionaires. We created, and I used to wrote about it at a point, what kind of policy environment, what kind of government creates billionaires in tens and poverty in millions, tens of millions. Is a recipe for crisis. So today now we don't have high growth, which is a problem. We now have growth, perpetually below 3%, which just means poverty will increase, unemployment will increase, misery will increase. And then what still, it now further, of course, excludes the majority of our people. So poverty also increases and everything increases. So now we must find higher growth. I think most of us in the economic conversation space in Nigeria, and whoever you speak to, I know the view of every one of the major economists in this country. We all agree that you need a minimum of 7% or so in Nigeria for us to be okay. A minimum of 7% GDP growth. Then you now need to be conscious that 7% GDP growth captures the poor, which is why, in spite of the fact that it may not have worked as well as we hope, which is why I'm not that dismissive of the social investment programs of this current government, that the vice president in particular has championed. We have to take care that we focus, as we are getting good growth, that we focus on the social sector. We focus on public education. And education and skills is the key to taking people out of poverty and unemployment. So we have to be careful to focus on public education, skills, technical schools, all of those things that will give people the competencies to survive in this growing economy that we get when we get 7% growth. So it must be higher and it must be inclusive. That's what I would say. Now, how do we get that? We get it from one, increased investment. And that's why you can see that every time I keep going back to the issue of investment. It is the investment in sectors that will generate the growth that will give us it is that growth, that expansion of sectors that gives you jobs, that gives you the opportunity to supply things to growing businesses, that gives people more employment. As firms grow, they employ more people and all of that. So the core of it is, how do we get investment back in sectors. And the answer to that is that you must be reforming those sectors. For instance, it's clear that we have not reformed a solid mineral sector. So the opportunity in that sector is being taken by illegally. The opportunities in our solid mineral sector is being taken illegally. How can we do that to ourselves? And then, of course, we've spoken about agriculture here, but then we've ourselves created an insecurity problem that destroys the opportunities. So we still have, and imagine the size of those two sectors, agriculture, solid minerals. They could employ the vast majority of unemployed Nigerians. But hey, until the policy environment and the business environment allows that opportunity to be taken. Look at the retail sector. It was growing, it was creating opportunities. ShopRite, this one, that one, malls, everything. To some extent, that has been reversed because of the problems with FX. Because all of those institutions could not get the FX to import the components they need. But again, that then creates an opportunity for local manufacturing if we make it conducive. So on and on. So it's always about reforms and investments and policy environment.
Thank you, Opeyemi. Excellent insights. All right, so we have a question, another question, and the attendee is asking, as a business owner looking forward to scaling this year, how would you advise my strategy to focus on? Or perhaps what would you advise my strategy to focus on? So this person is talking scaling.
Okay, fantastic. And I wish you the best of luck and the best of fortunes as you seek to scale your business. Now, that's good news. That question is the type of question one is happy about, because for you to be thinking of scaling, you've probably built a fair foundation for your business. Now, again, I said something, execution is about capabilities. Scaling is also about corporate capabilities. So please, my brother or sister, focus, ask yourself this fundamental question. What are the critical corporate capabilities I need to put in place to successfully scale? At the core of it will be people. I don't have to be in your company to know that. At the core of it will be people. There may be finance. How am I going to get the finance? That finance does not necessarily mean borrowing. Sometimes you should examine your business model. But for you, I suspect that for you to be thinking of scaling, you probably thought through a good business model. So how are there opportunities in your business model or in your industry for internal financing? Are you getting what we used to call spontaneous financing, when perhaps buyers pay? Do they pay in advance? Do they pay in advance? It depends on your business model and your industry and the conditions prevalent therein. But of course, if you have to borrow, then you must think through that. So once you need to get external financing, how do you get it? Is it debt or equity? You have to ask yourself those questions. And you have to get the right answers, realistic answers to that. So I've mentioned people, I've mentioned finance. Are there partnerships you could consider that reduce the imperative for whether more people or more money? Are there alliances, joint ventures? Are there people you could partner with so that you leverage what you don't really have to create inside your company? You get it from outside. Partnerships and joint ventures. So people, machinery, systems, strategy. You must ask yourself all of these questions and then begin to put them in place. Like I said earlier, execution, because now you want to scale. So, and you probably have some strategies, or if you don't, well, you could talk to us at RTC. But it then remains, how do I execute? How do I execute? And so you should focus on capabilities, including of yourself, which obviously you are doing by staying on this webinar, but maybe you also need one or two other programs, one or two other training. Identify your, I wouldn't say weaknesses, but those areas in which you need to be stronger. And make sure you remedy them. If it's finance, you go and get a course and you do it and you understand your finances better. If it is operations management, you go and there are people, I don't want to advertise on DCSL academics program, but look at the opportunities for training across places in Lagos where you can get the competencies that will empower you to be able to execute on your plans to scale up.
Right. Thank you so much, Opeyemi. As you were speaking, I also remembered this point, and I want to just share also with the audience that in the world that we're in today, when you look at your business, try to also think about the ESG element. All right. How is your business touching the environment, making impact? And the reason this is also important is because we actually have a basket of funds that are available to people who are doing businesses that have an ESG component. And what this means is that even in terms of the being able to raise money for your skill for a project, for instance, if you position it properly, you may be able to appeal to some of those kind of institutional financiers, and it takes you out of the narrative of the high interest rates that you see in some of the commercial banks and that. And of course, this also then needs you to be researching who are those people, which ones are interested particularly in your industry, which ones are playing already in Nigeria and things like that. So you'll be surprised the basket of opportunities from that funding element that is available to you. We have just a few minutes left, but we have a couple of, I think, one or two more questions. This attendee is asking, for dollar income, can we begin to think of exporting technology? And he or she says there's currently a migration, for example, of software engineers and data scientists abroad. So how can we discourage the migration, so to speak, and rather have the skills exported so that it benefits the country?
Fantastic question. At first, when the first half of that question, I was going to say it's already happening. So exporting tech is already happening. There are business models exclusively focused on that approach, keeping software engineers here and earning the income from abroad. So people have built models. I suspect that's what Andela also, the popular Andela does. And I know that many others. I have a son who is a software engineer who studied abroad, but who preferred to come to Nigeria, to my surprise, and he insisted he wants to come, and he's here in Nigeria. And I suspect he's thinking already along those steps. So it's already happening. There are many Nigerians engaged in software who are receiving payments from abroad. Now, I will not discourage anybody. I think we can we don't even yet have, I know about one or two institutions, Decagon, CC Hub, all of those. We're not creating enough software engineers. I think we can have, again, the private sector can do that, but again, government can help. We can create 250,000 software engineers every year. We can supply them across the whole world. We can create enough for Nigerian demand. We can create enough to earn this export income, this dollar income that we're talking about. It's not either or, where we should go full blast in creating them, because that opportunity to earn income abroad and all over the world. And if our people go abroad, the money will flow back home. The money will flow back
That's
home.
right.
People will come back home, send money to their parents, send money to their sisters and brothers, and so on. So I don't believe we should, but yes, I take your point. We should encourage more and more of our software engineers to plug into the right channels, because they need the right channels. That's part of the issue. That's why many of them will rather go abroad and get employed,
right?
Because they need access to those dollar flows. And it's not everybody that can get into Andela or somewhere, or Flutterwave or Paste somewhere. So that's why many may still go abroad. But increasingly, if we create those channels and we help create the systems for them to channel, then yes, why not? Let our people stay here And then let our IT companies also begin to explore that opportunity to earn income from abroad while providing software services.
All right, thank you. Opeyemi. We're practically out of time, but we have this one last question that I would like you to take. And this is from Daniel Jolayemi. And Daniel is asking, how can business owners increase capacity to execute their strategy without having to increase overhead costs?
Well, capacity to execute is it's not really about overhead. It's about human capital. It's about training. We do, I mean, my firm, when I say we, I mean RTC Advisory Services, my own firm. We actually work with quite a few firms into execution and then beyond, I mean, into strategy development, and then beyond strategy development into execution management. And I found that it's not such a big deal. The problem with execution is that it is not, you know, when you're talking strategy development, it's interesting, it's exciting, as they say, it's sexy, you know, it's fun, it's intelligent. But when you get to execution, it's not fun, it's messy, it's detailed, it's just hands-on, just monitoring everything, just doing. So all you need is to focus on it and to create the right systems around monitoring execution. And then where there are capability gaps, to ensure those capability gaps are filled. So people sometimes don't execute because they don't know how to, they don't know what to do, they don't have the competencies and the capabilities to do it. So you have to remedy that. And then you can get external help with execution when you have to.
All right, thank you so much, Opeyemi. I will just invite you to, you know, in the scheme of everything we've talked now, just take a minute and give us your closing thoughts.
Thank you very much, Audrey. It's been a fantastic conversation, and thank you very much, BC Adeyemi and Nike Taiwo and the DCSL team. I've enjoyed myself, as you all may be able to see. Now, 2022 is, like I said, the outlook is fairly balanced between positives and negatives, as you may have been able to determine. I suspect that it will be a better year for us. It presents opportunities. We're in recovery mode, we're in growth mode, and then where sometimes adversity helps. So we've passed through a period of adversity that has toughened us, given us some resilience, as Audrey has pointed out, and the opportunities are fairly expansive across sectors. The risks appear significant as well. We didn't talk much about the political risks. I suspect, as we always do, we will manage them and we will get through them. I'm more worried about the breakdown of law and order in many parts of the country, which is an X factor. But that's government's work to do. The work of business is to leverage the opportunities it finds across sectors: agriculture, trade, manufacturing, refineries, the Petroleum Industry Act, the Africa Continental Free Trade Act, the opportunity to find dollar incomes, the opportunities in payments and fintech and all of that, the opportunities in professional services, in the health sector, in all of those sectors. So there are opportunities, like they say, when the going gets tough, the tough get going, and I suggest that all of us get going. Thank you very much, and I wish you all a very successful 2022.
Thank you so much, Opeyemi. Always an absolute delight and always a great learning experience speaking with you, listening to you. Ladies and gentlemen, we've come to the end of today's fireside chat. I believe it has been as of immense value to you as it has been to me. A lot of nuggets. The essence of this session was to tweak really our thinking, help us to be able to go back with actionable information, look at our business models, take a second look at our industries, ask ourselves where the opportunities are, and see how we position for a more robust 2022 in our businesses, even given the challenges that we see in the landscape, and indeed helping us to better position to execute successfully despite those challenges. So we thank you for your time and for staying on to the end. I believe that if you still have any added questions for Mr. Agbaje, you could probably reach out to the DCSL team, and I'm sure Opeyemi will be happy to address any that come his way. So let me also